Okay, g'day everyone, welcome to the video. In this one we're going to look at a new recent addition to Xero, a new feature that's come out in the last quarter, and it's all about, some of you might have actually seen it before. When you were lodging your June quarter BAS, you might have seen something about it and wondering what it was. It's called filing unfiled amounts, or the function of filing unfiled amounts in your BAS. Let's go have a look at the BAS first. So here we're going reports. We also had it in our favorites there, but if you don't, you can also access it through the main menu, of course. Activity statement. Now this is a function that's only available on Simpler BAS. It's not available on the full BAS, so that means it's only available for businesses that are turning over less than 10 mil a year. And what we're going to do now is we're going to have a look at the June quarter. And you'll notice this little thing here that was never there before, unfiled amounts included. Now what does that mean? If any unfiled amounts are found for the period, they will be included. So previously what you've had to do in Xero and any system, for the most part, is if you had closed off a quarter, say we've closed off the March quarter, we've lodged the BAS, and then in June we've had to go back and make, or say anywhere after March, so April, May or June, anywhere in that quarter we've had to go back and make an adjustment back in March, but the BAS had already been lodged. Now what you'd normally have to do is at the end of the year, you run a reconciliation in the GST reconciliation report. That's one way of doing it, and I made a video about that here. I'll put a card up so you can check that one out. And you had to do a reconciliation to pick up any amounts that were lodged or posted after BASs were lodged, so that you could pick it all up and chew everything up for the fourth quarter, so that the full year result was what it should be. Now this new function here, unfiled amounts, that is looking to automate that, so you wouldn't need to run this GST reconciliation report. Maybe a lot of people might still want to run it and like to do their own checks and make sure everything is reconciled before they finalize the end of financial year. I'm one of those people. So the GST reconciliation report is still quite important, I think. But if if you're confident in just trusting what Xero spits out, which it should be alright for most cases, you can go to the unfiled amounts in your BAS here, but you should still do your own investigations to find out what has happened, why is that here, and make sure it wasn't included in any other BAS. So that's why the end of year true up or the GST reconciliation report still has a lot of value, because it's a surefire check that what you're lodging hasn't been lodged before or nothing has been missed. But anyway, for the purpose of this video, we're going to look at this new function here for unfiled amounts. So let's go and have a look at this link here and see what they tell us. And what they're saying is, for example, if the activity statement for January has been finalised, so you have to have finalised the statement in Xero, not necessarily whether you've lodged it or not. It has to be published and finalised in Xero, or finalised. So if the statement has been finalised and you've just entered an invoice dated 10th of January, after the January statement has been finalised, Xero will add this transaction to the next activity statement as an unfiled amount. So you're picking up any changes that were made into previous periods after an activity statement has been finalised in Xero. That's an important distinction there, not necessarily if it's been lodged with the ATO. So it says here, unfiled amounts are also added when you edit, void or delete transactions that were included in a previous activity statement. So if you've deleted an amount that was in a previous activity statement, that means they will subtracted off the next statement. So it can add in and it can take out. Since you can check for unfiled amounts by looking at the transactions by tax rate, we'll have a look at that in a second. It also says unfiled amounts are added automatically and there isn't an option to switch them off, which is important. This is when you're on Simpler BAS only, guys. Are also added if the activity statement, are only added if the activity statement finalised was for the immediately preceding period. If you've been lodging here, not in the order of when the statements are released, so if you've been doing things a little bit out of order, then this might miss something. So it's another reason why the GST rec report or the end of year BAS true up still shouldn't be discarded. It's still an important step. And are only added for transactions that have tax rates, e.g. GST applied for them. So if you didn't apply a tax rate to it, it's not going to get picked up. Important to realize that this could be a handy step, but it's not necessarily perfect. So we'll go have a look at the activity statement. We can see here transactions by tax rate, transactions by BAS field, and they said there that we can check the transactions by tax rate or transactions by BAS field to see any unfiled amounts. So what we're going to do, we're going to have a look at that. And what I've done just before, I went back and I posted an entry into March after finalising the March activity statement, and we're going to see if it's picked it up in June as an unfiled amount. So we'll have a look at that. So yeah, everything looks pretty normal here. Scroll down. Everything looks normal. GST on expenses. So we've had a look at all this. And then, hey, hang on, what's this? GST on expenses unfiled amounts. Now, as you can see here, test supplier, invoice, unfiled amounts. This is the one I posted. So I posted this into March after the March activity statement had been finalised in Xero, and therefore it has been picked up in the June activity statement as an unfiled amount. So you can click into here and have a look at it and think, oh yeah, no, that is legitimate. That did happen in March. I'm accrual based reporting, so this should be. That's why it went into March after we posted for March. We'd received the bill, but it hadn't been paid, so it's gone through as an accrual entry. And now it's been picked up in June. So we're satisfied with that, and we're going to leave it there. We're going to leave it in there. Now, if you don't want to include unfiled amounts, you can remove them and change the date, like we just opened up that transaction, if your period's unlocked. Or, if you just want to leave everything till the end of the year and do a true up at the end of the year, like we've had to do in the past, using the GST rec report, you'll just go down here and you'd make an adjustment. This was a purchase, so it'd be 1B. And I think it was for $110. Let's just double check that. $110, $10 GST. So let's say we don't want to include the unfiled amount. All we'd have to do is adjust this, take off $10, and we'd say remove unfiled amounts. Adjust, and $7.98 here should go to $7.88, as it has. So that's how you can remove it, guys. You have to do it manually. So that's pretty much it. It is a handy little feature. It is, it can save you time. But I still would not ignore the GST rec report at the end of the financial year doing a BAS true up. That would still be my preference. But that's a decision you have to make for yourself. If you want to do it quarter by quarter, and you're happy you're picking everything up, by all means. But if you want to have a bit of a closer look at things and do your own manual checks, then the GST rec report is still definitely worth doing. But that's pretty much it, guys. Thanks for watching the video. If you enjoyed it, please hit the like button. If you want to see more, I'm putting out videos every week. Hit the subscribe button and then you'll see more of these. If you want to book in a training session, hit us up. There's a link in the description. We can organise a tailored training session. We can do it online. We might be able to come out to your business depending on where we and you are located. Once again, thanks for watching, guys, and we'll see you in the next one.